More now on how the Fed's decision to taper could impact Treasury yields and mortgage rates. Many home buyers and sellers are worried that those rates will rise in 2014, making home ownership more costly. Diana Olick reports.
At Apex Home Loans in Rockville, Maryland,
will they taper?
Lender Craig Strent watched today's Fed announcement with some trepidation, worried mortgage rates might spike.
I was relieved by how the markets reacted so far and that we didn't see a sharp rise in interest rates as a result of the Fed telling us that they're going to start tapering. That certainly could have happened.
The moderate pullback in both Treasury and mortgage bond purchasing did not push rates dramatically higher. The average rate on the 30-year fix has been sitting at 4.57% since the middle of last week. But concern over the Fed's potential move today may have been behind a sharp drop in weekly mortgage applications, down 5.5% to the lowest level in a dozen years.
Mortgage interest rates generally hate the idea of uncertainty, and so uncertainty is not a good thing. And so this definitely brings some certainty in terms of the Fed kind of showing their cards as far as the direction of rates.
But this is not the end for rate moves. The Federal Reserve is just beginning its pullback, and this week the regulator for Fannie Mae and Freddie Mac announced they would raise dramatically the fees they charge to lenders for loans with medium credit quality. Those fees will be passed on directly to borrowers.
Of the two announcements in the last 24 hours, by far the bigger of the two announcements was by Fannie Mae, particularly if you're a first-time home buyer who's looking at putting, less than 20% down. You could see mortgage rates rise, by as much as 0.4%.
While it may not sound like a lot, combine that with fast rising home prices and lackluster wage growth, and buyers, especially first-time buyers, will continue to struggle even to make the necessary down payment.
I think absolutely the rate increases will be painful.
Just not as painful as they could have been had the Fed made a bigger move in beginning its bond buying retreat. For Nightly Business Report, I'm Diana Olick in Washington.